am the voice. Now I am the voice. I will lead, not follow. I will believe, not doubt. I will create, not destroy. I am a force for good. I am a leader. Defy the odds. Set a new standard. Step up.
Hey champions, good morning. How you guys doing? I always love that intro. So thank you, Justin and Morgan, for doing that intro. I always forget about my wonderful Tony Robbins until I hear this intro. So I love it. What a way to start the day. What a way to start this class. So with that said, I'm going to be talking today about, as you guys know, one of my favorite topics, which is wealth building and real estate assets. And so we're moving on to class number 3 of this series. I kind of wanted to talk a little bit for people that maybe didn't listen to class number 1 and class number 2. If you recall, on class number 1, we talked about additional sources of revenue. And, obviously, in order to invest in real estate, we need to make sure that we're maximizing our income, making sure that we have those additional sources of revenue. And you know what, you guys, right now in this market share, it's no secret that we're moving through a, let's say not a turbulent, but, a different type of market share, right? Where there's certain challenges that are out there. And we need to make sure that each client that we're coming in contact with, that we're maximizing the benefits of not only receiving whatever commissions or additional revenue we can, but also assisting them, right, in whatever it is that they need, with whether it's purchasing property or, whether it's insurance or whatever else it is that your client needs. We've given you guys different resources here. And then, in addition, I'm sure that you guys also have ideas for additional resources to build your income, because without money and without income, you're not going to be able to invest in real estate. So class number 1, we talked about that. On class 2, I showed you a sample LLC portfolio. And I hope that, a lot of you looked at that and got excited, because that is the benefit and the potential of owning real estate, like just a minor snapshot of what you could do and what you could build if you have the patience and the focus to, concentrate and make sure that you're working towards real estate investing in the next, decade of your life, because we're going to live that decade anyway. So in class 2, I talked about that and just gave you that sample portfolio, because it's really not, about the money coming in, right? It's more about what that money does for us. And what it does when you're building wealth and you're building different assets is it gives you opportunity, and it gives you different resource to live your life in a different way, meaning you can start doing the things that you love and enjoy. And so with class 2, I hope that, a lot of you were inspired by seeing the ability to build wealth and residual income through real estate in just doing certain things, each day that are working toward that, and being very aware of where it is that you're placing your energy and what it is, that you're doing. And so in this class, we're going to be talking about budgeting and protection. And so the thing, and it's so funny, when I was thinking about this class, I know that the topic in the class was financials. And a lot of the time when, we're thinking of financials, we think of our CPAs and we think of all of the additional people that are helping us, in our business, whether it's CPAs or bankers. However, those of you that have not studied and do not know how to read financials, I would recommend that you take a class or you get a book on it and you go through and you really learn how to look at financials, because if you don't know how to do that, you're not going to know how to assist and how to guide the professionals in your life. And yes, I actually said that correctly because they are professionals. However, nobody knows our business, our wants, and our needs more than we do. And so we have to definitely know and utilize, those tools to assist our own portfolio and to assist the people that are helping us manage, our portfolio. So with budgeting and protection in real estate investing is not necessarily about the physical property. So just like you're reading right there, it's not necessarily about the physical property. It contributes to the overall success and resilience of your real estate portfolio. So what does that mean, right? You would think that we're talking about protection on real estate assets, and a lot of people's minds will go to whether it's, insurance on the property, whether it's maintaining the property, and doing those types of things. But as we're going to move through this, you're going to find out it's not necessarily always the case. It is making sure that the property is, thank you, Justin, or whoever's moving the slides. I appreciate you pushing it back, but I'm done with it. You can move forward to the next one. Let's move on to budgeting. So, as we talked a little bit about budgeting in the previous classes, it's crucial, okay? Like it's crucial in real estate investing to make sure you're allocating your resources wisely and managing your expenses in order to have financial stability. So the funny part is that this whole budgeting section is so crucial, not only in investing, but also in any type of business that we're operating, right? Whether it's, a real estate brokerage, whether it is your real estate business. Last time when I was talking to you on the last class, I was telling you guys to make a list of all of your income and expense, what is coming in and what is going out, because without that, you're not going to be able to have any idea of how healthy your business really is. And so, these are the things that will make or break a business, budgeting, and it's very, very crucial, for your financial stability in any type of business, even real estate investing, where it's money in, money out, and it's residual income. So grab a pen, because we're going to go through these items, okay? And then just to give you a little bit about what this class is going to entail, I'm going to go through certain items that are very crucial to running and maintaining a real estate portfolio. Whether you have one property or whether you have multiple properties, you want to start the foundation of how you're running your business with the structure that you're going to operate that same business in, whether you have one property or whether you have 100 properties. So these are crucial things that you need to know how to track, or you need to also give your CPA and give the professionals, like I said, in your life, this information so that you know what it is that they're tracking for you, and how to be able to read your financials. Because ultimately, you're the one on your property that is going to be navigating and giving, certain expenses, income and expense on what is happening, in your portfolio. So you guys write these down. Number one, you want to identify your expenses. This can vary on properties, right? Like certain properties have more maintenance costs than others. There's property management fees. I'll go into that a little bit later. Some people have property management companies that are running and operating their portfolio, which there's absolutely nothing wrong with that. over the years, we've made it so that we're actually operating and we have our own property management company doing ours now. But there's a lot of people that do have outside property management companies. And of course, you have to include property taxes and insurance on your expenses. So number 2, you want to identify your income. So what are we doing here again? Income and expense, right? So rental income, appreciation, and tax benefits. I included these 2 on there because what happens is when you're doing a P&L or when you're identifying your income and expense on property, you want to make sure over the long haul that you're also including the appreciation on that property and your tax benefits. Because over the course of, let's say, a year, 2, 5, 10 years, when you add up the net worth after identifying your income on this is where you start seeing the millions of dollars add up on the net worth for the income, on your real estate portfolio. So number 3, you want to account for upfront expenses such as the acquisition cost, legal fees, and renovations. So right here, this is where a lot of the time in real estate investing, people can go wrong. Oh, at the end of this, what I was going to initially say is I'm going to go through these, and at the end, I'm going to go through things that I would have done better regarding all of this so that you guys can avoid certain walls. I did hit certain walls that cost me time. And so I'm going to share at the end what it is to do from the very beginning, with tenants and with the property regarding all of these bullet points. So you want to make sure that you do have some kind of reserve in order to cover certain expenses for the property, legal fees, renovations that come up. Because when you own property, there's going to be certain things that happen. It rains and all of a sudden you have a roof that's leaking everywhere, or you have, evictions, people that are not paying their rent, that type of cost. So you always have to allocate a certain reserve fund in order to be able to operate a real estate portfolio effectively. Number 4, ongoing operation cost. Budget for recurring cost involved in maintaining the property, maintenance, utility, and management fees. So now that I'm looking at this, it might sound a little bit repetitive on the last slide. However, what happens with number 4 is that your operation cost varies. Like I said, per property. If you have a house, it's going to be very different than multifamily units. If you have, let's say, a house in a very nice area where it's one tenant and they're maintaining the property very well, your cost is going to be a lot lower. So you can set your margin a lot lower. Maybe you only need 3 months reserve on that property. If you have, let's say, an apartment complex, which is a sample that I'll be going through later with one of mine, in an area that maybe isn't so wonderful, you're going to have a lot more operating cost involved. And so with that type of property, you may want to have maybe a 6-month reserve for all cost and expense on a property, that is a little bit more challenging to operate. And you need to make sure that you're adding in as you go all of your maintenance cost and tracking that cost, because at the end that does, affect your P&L on any property. Number 5, contingency planning. Allocate a portion of your budget for unforeseen expenses. This right here, when you're owning multiple properties, this becomes much less of a burden. And so this is why when I tell people, when you're initially starting out, and I talked about this, I believe on class 2, when you're initially starting out on purchasing property, you're much better off purchasing a 4-plex. It's still residential. However, what happens is if you have one vacancy it's not going to affect your bottom line so much. You're not going to have to carry so much cost if you have a vacancy versus, let's say you buy a house and that the house goes vacant, and let's say you have a mortgage on that house, you're going to suddenly feel like, after 2-3 months, maybe that property is being re-rented, maybe it's going through eviction. You'll feel that burden a lot heavier than if it were a multifamily units. And so I always tell people starting out, the first place that a lot of people go wrong is they will buy a house where it's one family, and then all of a sudden they give up and they say, wow, this whole landlord thing, it's not for me, because you feel the stress of having to maintain that property with no income. So always have a contingency plan in place for any property that you buy, for your vacancies and for any types of repairs. And this is a big part of protecting your real estate asset, because if you don't have the contingency plan in place, then all of a sudden, like I said, people give up on this before they even get started. And then you don't have anything to protect, right? Because your whole investment is gone. The idea of what it is that you want to do moving forward gets changed. And so, make sure that contingency plan is always in place. Reserve fund. So on a reserve fund, you guys, when you own property, if you're purchasing property, you'll notice what banks require for you to have as far as reserves. There is a reason for that. So when you qualify to purchase a property, they might say, we need to see 6-month reserves for whatever that mortgage is on the property in order for you to be able to qualify for the purchase. Now, a lot of people will have that, and then when the property closes, they'll use those funds to either maintain the property, upgrade the property. The one major thing is they'll put too much into the property, being a rental, and then their reserve funds deplete. And then once that happens and your reserve funds are not where they should be, there's that stress factor, and you don't have the money to, account for whatever upgrades you need, whatever vacancies you have on that property. And then this is super important. You've got to look at your budget monthly and be prepared to adjust it. This right here, I have a little story on this one. I was talking to a friend of mine a couple of days ago, and we were talking about habits in real estate and habits in business. And you see a lot of the time people that are in our industry or were in real estate or, just driven and want to do better. They have a morning routine, and that morning routine usually consists of getting up. A lot of times people say, don't look at any emails, don't look at any texts, don't do any work, for a couple of hours until you do your morning routine. And whatever that is, exercise, meditation, whatever that routine looks like for people. But we hear that constantly in our industry. Give yourself time, have that morning routine. Well, it's ironic. I was talking to, like I said, a friend of mine a couple of days ago, and he sent me, a video on it. And as we're talking, he said, check this video out. It's so good. And after I listened to it, I want to tell you, this is the one thing that I have consistently done, I would say the 20 years that I have been in business. The first thing that I do when I get up is contrary to what everybody says should be done. I get up and I start working immediately. And usually that's at 5 o'clock in the morning. And I am working like consistently and steadily, looking at my P&Ls, reviewing and adjusting my budget, reviewing and adjusting whatever changes I have to make in the companies, reviewing and adjusting whatever it is that has to happen on each property. I'll actually take a look at the P&Ls and review certain properties in the morning or tenants. And I'll do that for a solid 2, sometimes 3 hours. Those 2-3 hours in the morning, when I immediately get up, you're in a state where you're rested, you're clear, and you're super sharp first thing in the morning. Like your brain is on it because you've just rested, you've just slept. So those 2-3 hours of work, it's literally like you've worked for 8 hours in the day. And I can tell you guys, I know that I went on a little bit lengthy with this particular item that I'm talking about, but it is the one thing that I know without a doubt has definitely propelled my business forward, is getting up and working right away, contrary to what everybody else says that we should be doing. So get up, work for 2 hours. You'll feel like you've worked for 8. And then after that, do your workout, meditation, whatever it is, because your mind is super clear and sharp. So review and adjust consistently. 8, tax planning. Stay on top of this and seek the advice of experts. This right here is so, so important in not only your real estate business, but in property ownership. I'm telling you, you have to have a good CPA, and I think I went into that a little bit, in the last class. You have to have a good CPA, and you have to have somebody that is willing to talk through things, not just when it's tax time. So once it's tax time, it's too late. I mean, well, I guess it's not too late, but better late than never. But it's too late to strategize. It's too late to make adjustments. It's too late to talk about what could be done differently in your business. So get a good CPA that is willing to work with you, willing to talk to you, so that you start understanding what tax planning really entails. Because one bad tax planning year, and I've also learned this through hitting a wall, because there have been years where things are going really well, and I'm thinking, you know what, to pay attention to this right now, it is not super important. And then as a result, what happens with poor planning is you don't make certain moves in your business that have huge tax consequences. So get an amazing, good CPA that you can work with for your tax planning. Huge thing in protecting your assets. Number 9 here, I placed this on here because this has to do with the protection section, with the budgeting and protection section of the course. However, this is a course that I will be covering in detail in the next class, because what happens is you hear people talking a lot, about the different types of corporations, whether it's a C Corp, an S Corp, an LLC. What type of corporation is it? What is it that you're, actually operating under? And what are the tax benefits of the corporation? And why? Why operate through, corporation? All an LLC is a tax filing. But believe me when I say that LLCs are definitely God's, the universe's gift to real estate investors and to entrepreneurs. And if you're not operating through one and you're not utilizing one in your business, even as a real estate agent, then you're losing out on a lot of benefits in your business. So I'll go over number 9 in extreme detail on the next class, and then I'll let you know which one I feel is best to operate under, and for what structure is better utilized with each type of corporation. Cash flow. So this right here, when I was talking to you guys about adjusting and looking, at your portfolio, cash flow is the number one thing in any business or in any endeavor that you need to be paying attention to. Because if you're not cash flowing, you're not in business. If you're not cash flowing, you have a liability. And so these are the things that, this is the 5 a.m. wake up, the 5 a.m. to 7 a.m. like work that you need to do to take a look at cash flow. I'm going to give you a sample of what is possible on one of, this is a personal sample of an apartment complex and what is possible and what to look for as far as cash flow, and a sample of what it is that you're including for cash flow. It's a real life sample, okay? On a 16-unit apartment complex, the rents on that are $1,400 a month per unit. On this particular complex, I have one pending eviction. The total rental income for the 16 units on this is $22,400. The operating expense, I'm including property management only because on this, even though I run my own property management, I still always want to include that type of management fee to give myself a little bit of a cushion, okay? And so $1,792 for that. Maintenance and repairs estimate a month about $600. The total operating expense, you add that up and you're going to get $2,293 on the initial expense. The vacancy allowance, number 2. So I estimate about 5% because I have the one pending eviction. So you take that, multiply the 16 units, 0.05 times the 1,400, you get the 1,120. So for the vacancies, I want to, allow that amount of money for that. Tax insurance, estimating at $1,200 a month. Legal fees. For the evictions, it varies because, the initial standard eviction that goes okay, we'll estimate at about $800. It can get complicated if they contest it or if they don't respond, if the attorneys don't respond appropriately, which I'll go into that a little bit later. And so the total cost on this particular property, there is no mortgage. It's $5,512. So the net cash flow on this, you take the $22,400 minus the expense. This particular property cash flows at $16,888 a month. Now, if you were to have a mortgage on something like this, you would just subtract, obviously, whatever your monthly payment is on the mortgage by, the $16,888. That's your cash flow. On property, if you're first starting out, as an investor, you want to make sure that you're at least breaking even on your cash flow. I always tell people, if you're going to buy a piece of property, even if you're breaking even, in the state of California, the rate of appreciation for property is so high that you're going to make a whole lot of money over the course of a decade just holding that property and breaking even on the cash flow. So something like this is a 16-unit apartment complex, more rental income flowing in, and so obviously the net monthly cash flow is going to be a lot higher. So here are items, and the reason why I think it's very important to talk specifically in these classes that I'm giving is because these things here are items, how we look back on life and we say, wow, I wish I would have done this, and this differently. Because after you go through certain things in real life, it's very different than reading it in a textbook or than, gaining knowledge through other people, because you feel it. Whenever you hit a wall in life, you feel it and you have to restructure and revamp. And so things that I would do differently is, number one, a lot of people use, let's say, the apartment association contracts and things like that. I would definitely have better tenant contracts. And, the reason for that is a lot of the maintenance responsibilities on a property. I'm going to give you a sample. So if you get a tenant that, is really taking care of a property, you don't have so much to worry about because you know that they're maintaining it. If you have tenants where this is something that happened, in one of the Ontario properties. And it was, recently, where they have pets. So if you allow somebody to have, dogs or cats, they have pets. And then they put in, a request because now they have fleas. And when I sent the maintenance person over, he said, they're everywhere. Like, it's infested. And so now it might infest other units. And we cleared it out. We took care of the issue, but then guess what happens again? Is a month later, the same problem is there because the tenant is actually not taking care of removing, or actually not removing, they're not taking care of, their pet or the property. So in these contracts, what I would recommend from the very beginning, if you're going to take a standard contract with your initial investment, go through it, take the time to read it. I know usually contracts are tedious to read and go through. Take the time to read it and to write in modifications and to make that the tenant contract. Because then at the end, it's so much easier when you say that is your responsibility to take care of. If you look in the contract, that is your responsibility, and then you don't have, any possible tenant problems. Termination clause, make sure that that is, very clear. I feel on contracts for the landlord, the shortest term, that you could get is probably the better, especially when you're dealing with multifamily unit. If I could do month to month, that would be even more amazing than having a 1 year type of contract. Most tenants will want, a 1 year. I would recommend never going above that. And there's several reasons for it. So when you have a property and let's say it's month to month, you have the ability to give that tenant notice that they need to vacate. Or you also, have the ability to, let's say, have them vacate and raise rents to whatever market level is at. Because a lot of times it's like, let's say in this market, rents are people are renting because, they're waiting to buy property. They think that interest rates are going down, and, a lot of people are waiting to buy property. And so the rental market is pretty good right now. And if you're specific on contracts, you have a lot more flexibility in order to either vacate the tenant, raise rents, or recover money. And so I'll give you a sample of what can be done or what has to be done in order to raise rents above, let's say, the 8% that, we're allowed to do per year. Is you have to have the tenant completely vacate the property. That takes a 60-day notice. You have to give them a 60-day notice, and you have to have a reason, like complete and total rehab of the property, or you're going to move into the property. Like, there's not very many reasons that you can give for somebody to, have to actually vacate the property. And I've had to do that on a couple of the houses. I'm actually going through and doing, several of the houses, only 2 at a time, because then the maintenance, gets to be overwhelming and the vacancies can be overwhelming. And so tight contracts will save a whole lot of issues in the future. And that is something I would definitely be very, very specific about, even more so than, well, no, I shouldn't say that. I'm not going to say even more so than in real estate. Erase. Be very, very specific in your real estate contracts. Another item, make sure that you have access to the property, meaning that you're very specific in when you as a landlord can go in and gain access to your property. So, make sure that whatever notice you give, however you're going to do that, is specific, whether it requires a 24-hour notice, like whatever it is, make it very, very specific that, let's say they don't answer. Sometimes tenants will avoid you, that you can post it in a certain location in order to gain access to your property. So that is another thing that I would definitely outline and, do very, very differently. Another item that I would do differently is screening tenants. So mind you, these items that I'm talking about are mistakes that I have personally made and moved through. And so believe me, like starting out, like I said, from the very beginning with this mentality and starting and running it like a business from the very beginning saves a whole lot, of problem and heartache and stress. So the screening of tenants. So make sure that you have the appropriate screening tools. And if you don't have them and you're just starting out, ask somebody that has been there, done it, and has them. The credit check will be a different credit check. You need to check for evictions, and that normally goes countrywide. You want to make sure that you know whether or not the individual has had evictions, because you never want to rent to somebody that has had an eviction. That means they had appropriate time to get out of the property and they made a conscious decision to not pay the rent and to squat in the property. And you do not want to have anybody with that mentality that is going to be renting your property, because if they have done that, the same rules apply like in anything else. If they feel comfortable doing that to somebody else, they will feel comfortable doing that in your property. And then you will have a tenant not paying rent and an eviction, a lot higher potential if you rent to somebody with a past eviction. So make sure that you have the appropriate screening tools. You want to make sure, another thing, that I would never rent to people that don't have, and this is me personally because I've ran into a lot of problems with this as well, is I want to make sure that properties are rented to individuals that are on W-2 income and have a steady job, meaning that they have income being paid through a company for several years. And why is that? If somebody is a 1099 contractor, or they're working under the table, or they're able to move and navigate, there's a good possibility that if you run into a situation where you need to recover money, that you will not recover your money. However, if you have somebody that is an employee on a W-2 that, let's say, has worked for the county or for whatever it is, like whatever company it is, and they have a stable job and stable income for several years, there's a lot more ability to go through and to collect any monies due through wage garnishment and through judgments. And so always rent to people that have that stable income. Verify their income. There are programs out there when you have rental property where it will actually go in and verify deposits that are made from, let's say they get direct deposit, it'll verify deposits made from the company and their bank account. And so you can actually see in real life time that they are receiving the funds from the company that they say they're receiving the funds from. So that is definitely, another pitfall that not pitfall, but another safety measure, that I would put into place for your rental property. Let me see, I made a note on certain items here. So another thing, and I talked about this, a little bit, I know, towards the beginning of, this class. A lot of time, a big mistake that we make when we're initially starting out in business, and you have to look at purchasing rental property as a business, right, is that we don't set up our tools and our structure the way that we should from the very beginning. Like, we just wing it, and then we say, well, we'll find somebody to do that, or we'll find, a good person to handle whatever it is. From the beginning, and especially the fact that you guys are realtors and you're already in business for yourself, make sure that you have a very good CPA. Believe me when I say it again, that it will save you a whole lot of money and a whole lot of problems and heartache. A banker. So you want to make sure when you start to build your real estate portfolio and you start to acquire more assets, and you have, let's say, a more diverse portfolio as you move along, you want to make sure that you are working with a very good banker. And I said this, I think at least once or twice in the last couple of classes, that you want it to be a business bank, because business banks will be able to look at your assets and look at your bottom line net worth, and they'll be able to see what they can do for you that is outside the box. So whatever lending guidelines, are going on, or whatever interest rates are currently, if you work with a good business bank and you have a good relationship and they see your net value and your net worth on your properties, I'll give you a real lifetime example. So my banker, I said it last time, I work with American Business Bank, and he's very good. I have followed him even when he was, at a different bank. When the market started to shift, because we've been in this market for, we're going to go into another year next year, but we've been in this market, we're going to be in this market for a couple of years at least. When the market started to shift and things started to change, he reached out to me and he said, you know what, Jennifer, it's time to start talking about a cross-collateral loan. And you want to be able to utilize the bank's money when it becomes time to purchase property again, rather than utilizing your own money. So let's talk about a cross-collateral loan. Let me show you what that looks like. But see, these are ideas that bankers, they're in that field and they see things that are happening. And so they bring that to your awareness. And so I said, absolutely, let's talk about it. And what they'll do is they'll take one of your LLCs, they'll look at the net worth on it, and then they'll loan you money based on that net worth. And the qualifications for a regular loan don't apply, because they're your banker. They know you, they have the relationship, they know the net worth on the properties. They're able to place certain liens on the properties in order to loan you those funds. And the same rules and regulations don't apply to business banks. So I would definitely, from day one, because I waited too many years to actually have that good relationship with a business bank. I was, doing probably the same thing that a lot of people do, which is work with different mortgage brokers in trying to get my loans in that way. Once you get to a certain point, you need to have that relationship with a banker. So why not start now and learning, different bankers? A good eviction attorney is crucial in protecting your assets. And this is another thing that I would do differently, and another situation starting from the very beginning. A good eviction attorney, and this is the segment that I'm going to actually end this with, because this is super important. So a lot of times in business, what happens when we're running a business, especially if, I don't want to say, women, because not necessarily that us women have like more emotions and heart towards things, but a lot of the time we can get our heartstrings pulled from different people. And when you're running a business, it is very important that you put protective measures in place to operate and make decisions for your business to make it operate like a business. So in your real estate practice, same thing. There's different boundaries and different things that you have to do with your clients or with people that you're working with. The same thing applies in purchasing and owning units and property. Is have a good eviction attorney, and one that does the following. So it relates and it goes hand in hand with having the heartstrings pulled, because when you have property and you have tenants, you will hear every single story in the book on why it is that somebody is going through a hard time and cannot pay the rent. And a lot of the times those stories, they will definitely pull your heartstrings. And it's hard to not have compassion for people that are going through a hard time. However, you have to look at it like a business and as a structure, Because what happens is if you allow certain things in your business to leak, it will deteriorate the business. And you have to maintain a very, very solid container in order to operate your business effectively. Immediately, a good eviction attorney, if they do not pay the rent on time, they'll issue a 3-day notice to pay rent or quit. On day 3, if they do not pay the rent, they will start the eviction process immediately. After the eviction process is started, they will require that they pay full balance in full in order to stop that process. If they don't pay it in full, they will completely carry it on through the entire eviction process to get the tenant out, do the lockout if necessary, and then re-rent the unit to somebody else. That's where obviously the property management comes in, but they work hand in hand. Don't wait on this. Don't do it yourself. Do not file these things and think that you can do it yourself. One wrong filing on an eviction and the eviction starts over. It is not worth it. One wrong service of process, they do the service of process on the tenant and the courts will throw it out and you will start over. So always work with a very good professional when it comes to an eviction attorney. And what I used to do, and here is a huge tip as well, when you own property, make sure that the tenants do not know. For me, it's easier. For us, it's easier if they don't know that I'm the owner, because then they don't know that there's certain decision-making processes that, I can say yes or no to. So you have to set those clear boundaries to say, you know what, the eviction attorney will handle the 3-day notice, and they will handle the eviction from beginning to end. It's very, very easy to fall into a pitfall, because this is where I've done things and, I would do things very differently. And this is why I'm sharing this with you. It's very easy to fall into that pitfall where you believe certain stories in people. I've had tenants that give, a sob story, and come to find out they're not the ones that are even living in the property. And they're not they qualified for the property. They have other people living there. And you have to think of it as challenging as it can be initially. Have these protective measures in place, follow them, run the business like a business. You have to stick to certain guidelines in order to preserve the integrity of your business, whether you have one property or whether you have 100 properties. Like I said, keep those same guidelines in place, because the minute that you breach that, the minute you breach your standards with your business, it becomes easier to do in the future, versus holding those standards and saying, this is a business, and look at it like, well, if they're not paying the rent and they're living in my property, then who is paying for them to live? Is that fair? Is that right? The answer is no. So you have to change your way of thinking, and it gets a little bit, tough sometimes with certain circumstances. But make sure that eviction attorney is super, super crucial in running rental properties. Those are the things I wish from day one, if I would have followed all those guidelines and put the practices in place, that I told you, I would have saved a whole lot of money. I would have saved a whole lot of stress. I would have saved, a whole lot of problems in the future. Because believe me when I tell you, even when you give a tenant some leeway, at the end of it, you will be the bad guy, regardless of what it is that you do. And, yes, I said that out loud. So run the business like a business from day one. That is the best advice that I could give you to actually protect your business. And believe me, like once, let's say tenants, and they will respect you for it too. They will respect you for holding boundaries. Let me see if I missed anything, because I kind of went off on a tangent on the eviction attorney. Do not wait to... I think I covered all of the protection items that I wanted to go through. Yeah, I think I went through all of it. CPA, banker, eviction attorney, don't wait. Okay, I think I went through all of it, you guys. Those are the things that I would do from the very beginning to protect my business and protect my asset. As always, if you guys have any questions on this, feel free to reach out to me personally. I'm always here to guide and to, assist. I love talking about, real estate and real estate investing. As you guys know, it's just a passion. So I'm always here and available to answer, any questions that came up during this class. On the next class, like I said, I will be going through structures of how to hold property, LLCs, which type of corporation. And I'm actually going to dive a little bit further into it, where I do know that there's a lot of agents here that are not operating under an LLC or under any type of corporation for anything. And I'm going to go into the reasons why you should be. Tax benefits, taxation on personal income and revenue versus corporations, how that all works. And also, that's a big, big part of protecting your assets and of building a very strong portfolio. So until next time, I appreciate all of you guys that tuned in. And like I said, I'm always here and always available to answer any questions. And make sure to attend the LLC and the corporation structure class, because you're not only going to need this in real estate investing, but you're also going to need this in your real estate business. And with that, champions, make it a powerful day. Take care, you guys.